Hey, what's up, everybody? It is Zach with Team Mr. Mortgage. 19 times the charm on this video, Tony Gwynn. Before though I go too far, I do want to take a quick second to say thank you to everybody who's taken the time to like and to comment and to share, not only on this video series, but also on some of my other posts. I'm a homeowner myself, and so I approach mortgage origination from the perspective of a homeowner, and I try to make this process as easy as possible for you or for your clients. And so to hear that I'm having an impact and that the stuff I'm putting out there is helpful and me in it's helping getting people in a better position means the world to me. If I can ever be of any assistance, please give me a call, shoot me a message, a text. I'm always happy to help. Now, if you've been following this video series, you know that we've really been focused on how do we have the smoothest and best home buying experience possible. The first video focused on maximizing credit. Then we shifted gears and we've been focusing on monies you can expect to pay at the closing table or before closing. So we talked about down payments. Last video, we talked about items paid outside of closing. And now we're going to shift gears and talk about the last items to expect to pay up front, which is going to be your closing costs. Now, if you missed those last videos, jump back on my timeline, give them a watch, like, comment, share, shoot me a message. There's some good stuff there, and I know that it can be helpful if you're going through this process. So when we talk about closing costs, the first thing that you're going to take into account are going to be payments for services rendered. So that's going to be things like your title services, your escrow services, your loan services, taxes and recording, things like that. So your title services, basically the title company has some pretty big responsibilities, but their main responsibility is to make sure that when you take possession of that home and when you close on that home, there's no other encumbrances or claims on that title. So that way somebody can't come over the back of you, 5 years later and say, hey, the previous owner owed me money and it was attached to this home. All of that's going to be free and clear, and that person will have zero claim on your home. Really important. Escrow services are going to be, they're the middle people. They have a really detailed and really important job. Their job, for one, they're the money people. They make sure the monies go back and forth and get dispersed correctly. So your EMD, which we talked about in the last video, gets sent to them. They're going to balance out your loan figures with the lender. They're going to set up your signing. As far as the notary is concerned, they're going to make sure your purchase gets recorded. Really important job. Now, you can shop around for title and escrow services, but what I can tell you is this. Typically, you're going to find that your agent is going to defer and go with the seller's parties. You can shop around, but what you're going to find is that the people that are already in place, the parties or the teams that are already in place, are going to know the transaction, going to know the house, they're going to know the ins and outs, and it'll be a lot smoother usually if you go with the seller's recommended party. Don't lose dollars trying to save pennies. It just doesn't make any sense. Talk to your agent there. They will give you good advice, and that's who you want to defer to. Then when we talk about lender costs, the ones you're usually going to see are either going to be an underwriting fee, a processing fee. Some companies charge origination fees. Points, if you choose to buy them, that's up to you. And appraisals for VA loans, they're the one loan that you're not going to pay for the appraisal up front. Those are the main costs there. They're pretty nominal. They should not be more than $1,800 to $2,000. It should not go above that. That's pretty common sense. Then the other thing to think about is going to be taxes and recording. You're going to pay transfer taxes. You're going to pay recording fees or stamp taxes, things like that goes to the government. They're always going to get their piece. Then we talk about prepaid items, so items that are paid up front. So the easiest example is going to be your homeowner's insurance. You're going to pay for that first 12 months on the anniversary closing, and then 12 months later, there's going to be another, the next year is going to come due. If you have an escrow account, which we'll talk about in a second, that's going to pay that up. Taxes, depending on when you close on your home, you may have to pay a portion of the property taxes that are due for that period of time. So in California, for example, we have taxes in November and April where property taxes are due. If you close within a 60-day period of those, you're going to end up having paying some portion of those taxes up front. The one that people get confused about is going to be prepaid interest, and it's pretty simple. Let's say you closed on January 20th of this year. From January 20th to January 31st, there is interest that's not going to be included in your first monthly payment. So you're going to pay that interest up front because, surprise, the banks want to get their money too. They're not going to give you a free 11 days of living in the house. So you'll pay that interest up front with the closing. And then the last thing that you're going to look at is going to be your escrow account if you choose to have it. All government loans are going to have them. They require that. But then if you choose to have it for a conventional loan, basically consider it like a bank account. You're going to make a monthly payment, principal, interest, taxes, and insurance. Those portions of taxes and insurance get built up into that bank account. So that way when taxes come due or when your insurance comes due, you don't have to worry about going and cutting a big check. It's going to be all right there, paid up front for you. Well, that's it in a nutshell. I hope this video is helpful. One other thing. There are ways to minimize these costs. Really important. For one, like we talked about before, there are down payment assistance programs. There's also closing cost assistance programs if you qualify for them. Talk to your lender. They can figure out if there's the right choices for you. Then there's also options for lender credits. So depending on the interest rate you take, we as a lender can give you credits. Talk to your lender again. They can give you advice. And then also you can get seller credits. Now, not every home's going to, every purchase is going to be one that you can get seller's credits. But if you have a good agent, they will know how to negotiate that for you. I defer to your agent there. A good partner of ours, Steve Guzman, shout out Steve. Guy's great. I've watched him negotiate great credits for buyers from the sellers on more than one occasion. It takes having experience like Steve brings to the table. So having a good agent who knows how to negotiate means everything. I cannot stress that enough. Make sure your agent has the experience to come in and negotiate and to put you in the best possible position there. So there are ways to minimize these closing costs. So talk to your agent, talk to me, shoot me a message, talk to your loan professional. They can give you ideas there. So that's it in a nutshell. Next week, we're going to get away from the money. We're going to shift gears and we're going to talk about something that's near and dear to my heart, your mortgage pre-approval. So have a great weekend, everybody. Give me a call, like, comment, share, shoot me a message if you have questions. I'm always happy to help. Have a great weekend.